Welcome to my YouTube channel. I told you anytime you have a question in your mind, what's the market going to do? Just come to me and I'll tell you what the market will do. Now, again, please during this presentation, would you hit subscribe, like, and share? Would really appreciate it. If you remember last week, I told you they always start the earnings season off with the banks. They do that for a particular reason, because they want to rally the market. The banks are the only group, and out of the 11 groups in the Dow, that can shift money over to the bottom line from set aside for bad debt. Imagine that. So they set the banks up first to get a rally started. So if a bank's only made $1 million profit, the bank can go to the set aside for bad debt, take $3 million, just simply shift it over. Now the bank makes $4 million. The stock market goes up. After that group, the next group they bring in is the group where you always hear, we beat the estimates by a penny, beat the estimates by a penny. And when someone hears that, they start buying the stock. Now, I want to show you something on my chart here. We're in a very severe downtrend channel, okay? Very severe. You can see it right here. Now, this downtrend channel is not going to change until Biden decides to stop spending. And spending is not going to stop. He increased spending by 50% in 2021, for God's sakes. Okay, this guy's not going to stop spending. He just put in that $750 billion bill to stop inflation. It's not going to happen. So here's what you have to do. When you're in a downtrend channel like this, these rallies occurred. The last rally right here, if you can see, this last rally occurred when we had earnings. Same setup. But then, of course, it turned around and it failed going the other way, right? So, but they always fail. Now he's going to do the same thing. He's going to try to rally the market again up. And what's going to happen? It's going to turn around and fail. Why? Because we just don't have the earnings. We have too much debt, too much inflation. It's not going to change. One of the big problems is that every time you turn around and you raise rates, that rate doesn't affect inflation for 12 to 18 months. That's right. It's a lag. So while he's moving those interest rates up very slowly, he's destroying our standard of living. So the market's going to continue to go down. So the other reason, too, that the market will rally during earnings season, they put the banks in first, because 2 weeks before earnings season hits, the banks or other companies aren't allowed to do stock buybacks, which pushes their stock up. But the minute they started report last week, now they're going to do stock buybacks. So that's another reason you're going to see this rally similar to the rally that we saw back here. But again, remember, these rallies will not hold because we just have too much debt, too much inflation, and they're not fighting the inflation the way they should be with big rate hikes. And that's their problem. When you raise rates just 50, 75 basis points, and that won't have an effect on inflation for a year, as I said, then during that year, you're destroying our standard of living. That's why it's important to do what Volcker did. He increased rates, 5 points, 7 points. That's the way you got to do it. But Biden won't do that. Again, he wants to spend. So now your next question should be, well, then what stock should I be in? What group of stock should I be in? Well, for that answer, join my gang free for 10 days. That's right. Go to philsgang.com and just hit get started, and you'll be a member for 10 days, and you'll get those answers. And you also get the answer, how do you short a stock? So check it out, philsgang.com, free for 10 days. Well, I hope this answered your first question. Join my gang for 10 days free, where you get the other answers. See you on the charts.